Well, my next guest says the disconnect between Main Street and Wall Street, it will continue next year. Here now is Strategic Wealth Partners, wealth advisor and investment strategist, Luke Lloyd.
Hey,
Luke,
Charles.
hey, my man, you're looking good.
Not as good as you.
Is that a good thing, the disconnect?
It's good for investors.
Okay.
It's not good for Main Street. The past 3 years, because of government bailouts, because of printing trillions of dollars, inflation only takes money to the rich. You know, interest rates being high is stimulative to the rich that have money in bank accounts, right? It's not good for Main Street. So we saw the biggest wealth redistribution in history to the rich over the past 3 years.
Right.
What's interesting is heading into next year, now we're going through a technological revolution, right? And this is only going to continue to divide Main Street and Wall Street. It's great for investors. It's not good for Main Street in the long term because artificial intelligence technology reared its head around the corner in 23. As we head into 2024, that's the year that this technology is going to start to get implemented and drive business efficiency for corporations.
Which is another way of saying taking jobs.
Taking jobs, which again is, in the end, this is an interesting thing. You know, next year, rate cuts. We talk about rate cuts in Federal Reserve a lot, right? There's 3 additional rate cuts being priced into the market above the 3 that the Federal Reserve wants to do. Why is that? I think it's potentially a possibility that the market's priced in so much efficiency in the marketplace for corporations to implement this technology that it's deflationary because your technology is so efficient.
Right, right. And you know, there's some other things that we can really veer off into. There'll be another push for universal basic income, modern monetary theory. People are out there saying you got to fill that gap. If there's no jobs because robots and AI are doing them, how do people survive and eat?
One of the reasons why I think that we are seeing such a strong labor market right now is the final push for these corporations to implement the technology. They need employees to implement this technology.
Right.
I think this might be the final push before you start to see layoffs happen, which is deflationary in the end. It's great for investors, actually, because corporations are making more money.
Right.
Not good for Main Street.
All right, folks out there, if you're actually working on AI to replace your job, throw a wrench in there. And not metaphorically, put a wrench in the machine so they call you back, you know, to fix it at least. Let's talk about where specifically to make money. You like Mexico.
I do. And this goes kind of along with technology. Right. The new nuclear arms race is now a technology arms race with China. And I think geopolitical tensions, you see oil trading at $90 a barrel back in September. Now it's down to $70 because U.S. is producing so much oil. Geopolitical events, I think that's telling of geopolitical events heating up. I think the supply chain will continue to move out of China into Mexico. $40 billion of foreign investment is currently being poured into Mexico, mostly coming from the United States. That's only going to increase. So we own EWW, a Mexico ETF. We love that going into next year.
Also, you like Raytheon here.
Raytheon because of national defense and geopolitics, right? What's happening in the Middle East, Russia, Ukraine. We think China, Taiwan is going to happen. Raytheon is going to benefit. It's also another thing, company that's probably going to implement AI solutions to become more efficient.
If there is a skirmish, and to your point, President Xi telling President Biden to his face that we're going to take Taiwan, we'll do it one way or the other. So it sounds like it's going to happen in his lifetime. Sounds like there's a greater sense of urgency. How does that change your outlook on the overall market?
Well, I think that's another reason why we have to pay attention to politics in today's world, because politics influences us, right? How that influences us is that we're going to continue to pour tons of money into national defense, right? We're going to continue to print a lot of money. So this
the irony right now is that Democrats are the ones who seem to be pushing more, at least when it comes to Ukraine, for military spending than they've ever done, at least in my lifetime.
Right. And the precedent's been set. So the question is, are we ever going to pull back our government spending?
Right.
The answer to that is probably not, especially if we head towards this socialistic mentality, which we already are kind of there with government spending. Artificial intelligence, technology pushes more to socialistic redistribution of wealth. We're going to be printing money for a long time, which is stimulative until it's not.
Oh, no. Listen, there's no doubt about it. From a market perspective, the stock market loves money and they love free money. Okay?
That's right.
Until it's not free. Accenture, how does this fit into the equation?
So Accenture is probably the best and biggest consulting firm that companies go to when they need help implementing new solutions.
Right.
So we talk about technology, we talk about artificial intelligence. Accenture is the first people, companies call to figure out how to implement these solutions to make them more efficient. So I think this stock's great, not only next year, but heading into the next 10 years, we own it.
You know, I got to tell you that you thought this out I love the narrative. It's not like I got a narrative, here's one idea. You've got all the pieces of this puzzle.
It's Christmas week and I'm here. I never sleep, I never stop working. We never stop working.
Right,
Like you.
It's great stuff.